assets, what additions or what depreciation is being done. Okay. And if the asset is no longer going to be used, in that case, we have to retire that asset, which is called as the retirement. Okay. So whenever we are buying an asset, we have to record that as an asset in the Oracle assets module. Okay. So that is procurement adjust. And if you are making any any repairs, any enhancements, or any impairment means your part of that asset is no longer usable. Those things you will record in the asset register. Okay. And you will be able to review the details of the asset in the asset module. Okay. Every month or every quarter or every year, when you do the depreciation, that depreciation has to be recorded in the books of accounts. So therefore that there will be a journal created. So that journal will also flow to the general ledger module. Okay. And then in certain cases, those assets may be transferred to somebody else. For example, laptops in an organization, we procure the laptops and then we assign it to the employee for use, right? And when the laptop reaches the end of its life cycle, that is when we sell it off, and we can transfer it to somebody else, or we can dispose of the asset and take care of it in our books. Okay. So that is like the overview of the Oracle assets module, where we do different kinds of transactions relating to our assets, particularly the fixed assets. But we also do for things like a factory is being made, or a large office space is being made. Those are called CIP. Okay. The in progress. So those things are the part and parcel of our application. Now the asset is also included is integrated with other modules like the purchasing module, the payables module, the HR module, general ledger module, inventory module. And how are they integrated? For example, the supplier is there in the purchasing module. So whenever we are procuring an asset, we are doing the procure to pay process. Along with that, we are also recording that asset. So that asset comes into the asset module. The asset information comes into the asset module. If there is a CIP, that is construction in progress, or something that is going on, which is in progress. Okay. So you don't get that asset right away, but maybe in 2 years, 3 years time, you will get that asset. Such an asset can be recorded in Oracle, the projects module. Okay. From the projects module, you will get the CIP information. And from that information, you will be able to build your Oracle assets information. And that will give you a list of assets that you have, often called as the physical inventory, that is taken to understand whether all your assets are in place, whether they are properly recorded, whether all that information is there or not. The units of measure information, again, all that information is there in the inventory. So you have to do a tally between the physical inventory and the actual inventory in the application to find out if there are any gaps. Often what happens, the assets, particularly if these are items that are being used in production, those assets have to be moved, or those are released, or it was not used and they are sent back, but the application is not updated. Or there was a problem with that item and it was destroyed, or it was never used, but that is not recorded in the application. So over a period of time, a gap appears in our asset register. Okay. So those assets and all that information has to be updated in the application. typically there is an asset life cycle that we consider. For example, we have manual asset. When an asset is being added for the very first time, we have to add it to what we call as an asset book. Asset book consists of all the register of assets that are there. And after a certain period of time, the asset will depreciate. Okay, so every year the asset depreciates, and over a period of time of the asset, the value of the asset will be reduced to zero. That is when the asset is to be retired. Okay, now whenever the assets information come from other modules like payables, projects, or other application modules, or even through web ADI, it is done through what we call as the mass additions. So mass addition is a process through which we add new assets, we upload new assets into the asset module. Okay, the term is asset addition, FA, fixed asset mass addition. Typically, in our asset module, we have three types of books. One is called as the corporate book, one is called as the tax book, and one is called as the budget book. What is a corporate book? Corporate book is a complete register of our assets in the organization. What is a tax book? Tax book is the set of assets which through which people get, the companies get tax benefits, or they can take tax adjustments into their books. And budget books are used to estimate the budget of these assets, to evaluate the budget and the value of these budgets. Now we have assets and the asset calendars. So different asset calendars are there. So those asset calendars, depending on what is their life cycle, it could be different calendars are being used to to take into account the depreciation and reduce the value of the assets. So for every asset book that you are defining, we have to assign the asset calendars, and we also have to assign the assets to the books. Now, how the assets get added is, asset is linked to an asset category. Asset category is linked to the asset book. So every asset, you have to mention whether it is a building, it is a plant, is it a vehicle, or is it some kind of items, or what kind of asset it is. Based on that, they will get added to the respective asset books. And each asset category is also linked with the depreciation that is assigned to the assets, depreciation methods that are assigned to the assets. Now, typically, asset books also have four important aspects. One is the calendar, just now we spoke. Other is the journal category, which we talked about, like whether it is a plant, building, machinery, vehicle, what it is. Then we have the accounting rules. That is, what are the rules that have to be taken into account. And then we have the natural account codes. So these account codes are the same as the one that we have defined in our asset, in our GL module, okay, which are used in the fixed asset module. So the calendar region, like these are actually within a page, there are different parts of the page. Okay, that's why they are being called as a region. The calendar region controls the behavior of the asset books, like whether it will allow purging, what GL it will integrate with, what is whether GL posting is allowed, what is the depreciation calendar, if the asset is added as part within the year, then is there a prorate calendar available, what is the current period. how we are able to divide the depreciation and depreciate if retired in the first year. So sometimes what happens, depreciate the life of the asset might be a year. In that case, you would have to fully retire, depreciate it at the end of the year. Then we have the accounting rules. The accounting rules is whether you want any amortization change, whether any changes, okay, any changes in the amortized, whether you want to allow those amortized changes or not, whether you want to allow mass changes or not, create intercompany balancing entries, okay, allow cost sign changes. That means positive, negative, whether if it was positive, it becomes negative, or if it was negative, it becomes positive, whether such things will be allowed or not. Allow the revaluations. So whether the revaluations will be allowed in the assets. If you remember in GL, we had the revaluations where we had said that the revaluations would be against the particular in GL, we had revaluation where the journal value changed, got modified, or the value of the foreign currency went up and down, or the asset was procured 50 years back, and the value of the asset now has gone up. So those kind of things are recorded in the revaluation, and whether you will allow group depreciation or not. That means group of assets will be depreciated in the same manner. In the natural accounts region, you have the retirement accounts, you have the natural account defaults, and then you also have the default account statement generator. Okay, so all this information is captured in the natural accounts region. The asset category positioning, typically, this is how, the main asset is actually when we add an asset to the corporate book, to the asset book, it is done through the asset categories. Asset categories are attached, these books, corporate books are attached to the asset category, and this asset category we assign to the individual assets. As and when you create the asset, those get added, and they in turn inherit all these properties. Okay, so the properties of the corporate book, the asset details, and all those are added back into the asset categories. So these are the parts of the asset category screen where you have the general ledger accounts region, the default depreciation rules region, the header region has all the header related information for the asset. And you can add the assets either manually, okay, or you can also import them through the web ADI or from other modules like projects or payables, and those assets get auto-generated from the application and they come in through the application. Required asset addition data, these are some things which are mandatory. You have to provide, for example, you have to provide the date it was placed in service, what is the category of the asset, what is the location, where is that asset located, what is the asset type, what are the different depreciation, what depreciation method is to be followed, what are the units, what books are, which asset book will it be assigned to, cost, what is the cost of acquiring that asset, depreciation expense account, against which account will it be expensed, and the asset number. Okay. Quick additions include like the asset number, things like, through this, the minimum information, as you can see, lot of information can be entered against an asset. So here we typically enter all this information, the minimum information with which you can create an asset quickly. So what are the minimum information? Things like asset number, description, category of the asset type, units, how many units have been bought, 1, 2, 5, cost, date placed in service, depreciation expense account, location. Then we have the optional fields like the tag number, category, descriptive flex field, serial number, asset key, the supplier or the PO info, employee info. Okay. All these are part and parcel of the asset information that you are entering in the application. These are the following windows which are used to enter the default information. Okay. Hello. Okay. So we have the, when you enter the assets, you have typically okay, these are the, there is an asset workbench, which is a combination of asset details, source lines, assignments. Okay. So the books, the asset, what are the asset details, to which asset book will it be assigned? What are the individual lines of that asset or parts of the asset, and the assignment, that is to what assignments is it to be given. All that is entered in the asset details. So mass addition process, through this mass addition, this is actually a concurrent program that we run to import all asset related information from other modules. Okay, so it could be like the payables module or the projects module or the web ADI module. So from there, you can import all that information into the asset books. This is the mass addition process. Okay, the first step is to create the mass addition. Let's say in payables, you have you have procured an asset, so you are paying the vendor or the supplier. So for that, you will then create a mass addition. Okay, and you will transfer that into the, there is a intermediate table, the mass additions table, and from there you will then import the program. Okay, you will run the mass addition import program where all that information will come in, and once you post it, they will get updated into the asset books. Okay, now in certain cases you might need to delete the mass additions also. In that case, you can delete or purge them also in case they are found to be inaccurate, or even post creation. Okay, even post addition, they may be added there. This is the mass addition interface table that this one is talking about. Let's look at this in little more details. So you have the payables module. You can create a mass addition. Through the mass addition process, these invoice lines are sent to the mass addition table. Okay. Even through from the other modules like Oracle projects or web ADI, the information is sent over and put into FA mass additions table. So this talks about the steps in the mass addition process. So once you enter the invoice in payables, you can then enter the distribution, the accounting information, and this invoice gets transferred to GL. At the same time, you can run the mass addition process. Okay. On the lines level, there is a tag where you can transfer through. If you tick that, it will get transferred to asset module. So you can run the mass addition process. From there, the detail invoice will be sent to the mass addition interface table. And from there, when you import the lines, all that information will flow into the mass addition table. This is step 1. The step 2 is to create the mass additions. Okay. So whenever you are procuring an asset and you have to add that as an asset in the asset module, remember that whenever a new asset is being added, so that asset has to be, when a new asset is being procured, that asset has to flow to the general ledger, the fixed asset module as an asset to be updated in the asset books. To post the mass additions, we have to run the mass additions posting program. So then the new assets get created and you can see that information in the reports or in the tables of the asset module. So through the mass additions table, mass addition program, you can upload or you can make deletion, you can do creation, you can split the data, you can put some lines on hold. All these things you can do through the mass addition program. Okay, one single program, you can put all those things. So whenever it is a delete, that means those will be deleted. And whenever it's an on hold, that means that will not be going to the asset. Okay. So if it is delete, then it goes into FA deleted mass additions table. So that's a separate table where that information flow goes. So any adjustments in assets that you have to do, Oracle assets will allow you to do changes. For example, change in the quantity, change in the classification, or changing the financial information, or transferring the data from one module to another module. Then we do the changes via APIs. So these are the adjustments of the entry. Suppose you have initially purchased 3 units, okay, of let's say 3 laptops or 3 desktops, but then you find one has stopped working. In that case, you are now left with 2 units. Okay, so out of 3, now only 2 are working. So one has to be deleted. So that you can say is called as an adjustment, or we also call it as an impairment, where that item is reduced, moved out. Any financial information adjustments that you do, whether to the cost or the depreciation or the prorate or the capacity, any additional enhancements that you have done, any servicing which enhances the value of your asset, or any new things that you have installed or added, any repairs that you have done to your assets, all those things are part of the financial information adjustments, so that the asset reflects the correct value, the correct value of the asset. Transfer of single assets. Okay, so initially, you might have it booked under a particular department or a particular account. Subsequently, you depreciate the expense account and then it moves to another, a different cost center. So you move from one cost center to another cost center. That is possible. Or it might have moved from one location, okay, from US to France. So that's also possible. Often this is very common with laptops and all. People actually assign it to the users, okay, and the users will be able to see that information between them. Okay, so that information has to be tracked properly. It was probably assigned in US, but now the person has moved to France. So that laptop or that desktop should be tagged with the location of France, right? So now see the building 3 is in US, California, maybe San Francisco, whereas this one is France, then the GB and the Paris and the building 3 in Paris. Okay, so that is how you can track all that information and keep the information updated in the application. Sometimes you might have to reclassify the assets. For example, initially you had the vehicle was leased. Okay. Subsequently, the vehicle became owned. Okay. Initially, these cars or the vehicles were taken on lease through a car agency, but subsequently they decided to take them over. Okay. They took them over. The company acquired them, so it became a company-owned vehicle now, right? So in those cases, you may inherit the same depreciation rule. You might amortize the depreciation, or you can copy over all that information that you have captured within the application. Now, mass changes. You can also do mass changes, meaning suppose some similar properties of multiple assets have changed. Okay, so you can, let's say here, as you look at this image here, it has different things: desktop, vehicles, building, or storages. All that information has changed. So what you can do is you can do a mass change. That means you change everybody, let's say from one location, company has moved from one location to another location. So you can do the same thing. You can copy all this information and transfer them over to the other module. Okay. Not module exactly, but you can move from, you can change the depreciation method. You can change the prorate conventions before and after. All this information you can change and modify them. Verifying the physical inventory, you can enter the physical inventory, you can run the inventory comparisons, you can view the comparisons, you can reconcile the differences, you can update the assets. Okay, all this, when you're verifying the physical inventory, like I told you a few minutes back, often there is a mismatch between the application and the physical inventories. In those cases, you have to do a reconciliation. You have to reconcile the inventory and the application. You have to check whether they are same or not, whether they the number of units, whether they are fine or not, or are there any variations in it. Then you can have the, update the physical inventory either by manual entry or through the Excel spreadsheets. It is called as the Web ADI. Through Web ADI, or you can use direct flat files through the SQL loader to load it into the inventory and the asset system. So you can run the inventory comparison. So through the inventory comparison, you can compare the status codes. So whether there are any differences, whether the items are matching up or not, whether these are new items or maybe duplicate items, or the asset number is missing, or they have not been, they cannot be reconciled. So those items are not being found in the application. So all those sort of things happen when we work with the physical inventory. Reconciliation of the physical inventory is very, very important. So you have to reconcile with the application to ensure they match between the two. These are the different components of depreciation. Okay. So when you look at the depreciation, depreciation is a very important part and parcel of your entire application. Okay, you have to do the depreciation, you have to do the, the different, you need to know the asset books, you need to know the depreciation methods. Okay, you need to know the prorate convention. So if the asset joins in the middle of the month or during the year, how are you going to treat the depreciation? Okay, prorate calendar, how are you going to prorate the calendar? What is the depreciation calendar? Okay, how do you depreciate the calendar? Now, these are the ones which are mandatory, the ones in yellow. The ones in brown, they are optional, like, whether there are any investment tax credits available, any depreciation ceilings are there, any price indexes, any units of measure, all these things are optional. Now, these are examples of depreciation. Okay. For example, this is called as a life base. That means in the first year, you get 60%. Typically, in a period of 3 years, the entire asset cost is depreciated. Okay. So year 1, we are depreciating 60%. Year 2, we are depreciating 30%. Year 3, that is 10%. That means the entire asset is being done over a period of 3 years. If it is a flat rate, that means in 3 years, we'll depreciate it 33, and maybe last year 34. Or initially, we might do rounding things, right? 34, or you can do 33.3333 like that. Okay. Or it can be based on how much of production is happening. Suppose you have 100 million products or 100 million tankers are being produced. So based on that, in the first year, 10 million is produced. Second year, 14 million is produced. Following year, 11 million is produced. So once you reach 100 million, that is where the entire thing will be reduced. Okay. So the entire value of the asset is brought down. Okay. How does the depreciation process run? So initially, you run the depreciation. Okay. And if the period is closed, so you have to open the period first. In assets also, we'll have a financial period. So you open the period, and then you are ready to create journal entries. Okay. Now, if the period is not closed, then you may run the depreciation, and those additional depreciation lines will flow to the general ledger module as journal entries. Okay. Now, when you do the depreciation process, first thing is it will do the generating the accounting. It will do the calculate the gains and losses. Then it will do the depreciation run. Okay. And then you will be able to reserve the the ledger, and you can generate your reports and look at the depreciation that has been generated. You could also have an asset retirement. What is an asset retirement? That means once the full value of the asset has been reduced and the life of the asset is over, then you need to reduce the value from your books, right? You reduce it to zero. So you have the information, okay? And against that, you will be able to track all that information in the module. So suppose you have the vehicle which is whose life is being adjusted, right? So the value of the asset eventually is going to come down to zero, which we also call as scrap. So once it is reduced to scrap, that is when you will retire that asset. Okay. So when you retire an asset, you first identify which asset you want to retire. You might do a partial retirement, or you might do a full retirement. Full retirement means all the cost and all the units, all of them will be retired. And partial retirement means only some of the units and some of partial cost is being retired. Okay, suppose you have a value of 5,000, and if it is entire asset, then one particular asset, one asset costs 5,000. So you're reducing the entire value, retiring the entire asset. Or it might be that two units cost 5,000. So you are just doing one of the units. You're retiring one of the units. So whatever its value is, maybe after some period of time, 2,500, instead of 2,500, the value becomes 500. So then you are just retiring the asset whose current value is 500, right? So those are the ways in which you can do the retirements. Anybody got any question? Okay. So asset journal entries. So like I told you, any financial entry that has an impact has to flow to general ledger. Full stop. There's no two ways about it. Okay. So in the subledger, fixed asset is again a subledger. You have to set up the subledger accounting so that you have the, in the asset book, you have to say allow GL posting, and you have to specify the ledger name in which it will get posted. So then you perform the asset transactions and you run the depreciation. And then you run create accounting. Once you run create accounting, that is where all the entries will be sent to the general ledger through the subledger module. So in subledger accounting, what happens is from the subledgers, all the data will flow to general ledger through the subledger set of tables. Okay. Anybody, any question on this?